This is Chapter 3, Adjusting Accounts for Financial Statements. We're taking a look at an alternate version of Exercise 3-9. We just finished up in Exercise 3-7. We're going to use the exact same data now to help prepare a classified balance sheet. We were presented earlier with Wilson Trucking Company's adjusted trial balance, where we picked up the information on the lower half of the trial balance to complete the income statement and the statement of retained earnings. Now we'll use the top half of the information to put together the balance sheet. So just a quick review about the classified balance sheet. On the left side, we have total assets, and on the right side, total liabilities and stockholders' equity. Now the left side, assets, will have two primary components. First, current assets, and next up, plant assets. Now we'll learn in future chapters there are two additional types of asset categories. One would appear right in the middle here. In future chapters we'll know that as investments. Another we'll learn towards the end of the text will appear right here, and that will be intangibles. But for right now, just those two categories. On the right hand side, we have liabilities. Two types of liabilities, current liabilities and long-term liabilities. We also have stockholders' equity on the right-hand side as well. So now we're going to go in and just fill in the data for each of these main categories. Under the trial balance, we have three types of current assets. Remember, current assets are those items that will convert to cash within 1 year or less, or that already are cash. So the three current assets we have will be cash, accounts receivable, and office supplies. We're simply going to list those in that order on the current asset section of the classified balance sheet. So cash for $12,000, accounts receivable for $22,500, and office supplies for $3,500. That gives us total current assets of $38,000. Now we move into plant assets. We have the trucks, the accumulated depreciation, which is the contra account that lowers the amount of trucks that have been used or the value of trucks that have been used, and land. So let's list those under the plant asset side. Trucks for $190,000. Accumulated depreciation, that's that contra account that offsets the truck balance. So although we have $190,000 worth of trucks that we bought, we're saying we've used up $40,000 of value of those trucks. So then the net value of trucks that we have that's still on our balance sheet is the difference between $190,000 and $40,000, or $150,000. Again, that's known as the net asset value. Last up, we'll add land as part of our plant assets for $50,000. And then total our plant assets, $150,000 plus $50,000, plant assets of $200,000. Okay, so we have total probable future economic resources of $200,000. Now, the claims on these assets will be in two forms: creditor claims known as liabilities and stockholder claims known as stockholders' equity. These will total up also to $200,000. So long-term liabilities plus our total of equity will also equal $200,000. Liabilities, two types, current and long-term. Current are those things that will be paid or sacrificed within a year or less. And we have just two of those, accounts payable and interest payable. So let's list those amounts. Accounts payable will be $19,000. Interest payable will be $6,000. And then we'll total these up as our total current liabilities. So $19,000 plus $6,000 is $25,000. For long-term liabilities, we only have one. It's a long-term note payable of $45,000. And so our total liabilities would be the $25,000 plus the $45,000, or altogether $70,000. Now for stockholders' equity, we list common stock and retained earnings. Retained earnings, this is the beginning retained earning balance. Remember when we go through those closing procedures and prepare the statement of retained earnings, all of these numbers plus this gave us our ending retained earnings. So beginning retained earnings plus revenues minus expenses, or in other words, revenues minus expenses is net income. So beginning retained earnings plus net income minus dividends equals ending retained earnings. So first off, common stock goes in for $30,000, and then we have retained earnings. Remember, we got that from the statement of retained earnings. You can go back to exercise 3-7 to watch how that was calculated, or you can do it again quickly. Just take 125 plus 68 minus all of these expenses minus dividends, and it should equal 138,000. So then we simply total the liabilities and equity, and we total up to 238,000, the total amount of our assets.